It's 2 o'clock. It's time for Tax Talk Tuesday. We do this every Tuesday. We come to you, we give you some area of the tax law that I think will help you. So today we're just going to jump right in. There's only a few more weeks until the filing season ends, and the filing season officially ends on May 17th, which means you need to file a extension if you don't get your tax returns in by May 17th. This is for individuals as well as actually nonprofits. A lot of nonprofits, the Form 990s are due in May. So today I wanted to talk to you about what happens when you make a mistake on a tax return. What should you do? And it's funny because I'm actually just working on an amended return, and the taxpayer left off, they forgot to report the home sale. So one of the things which brings to the topic today is really, what do you do when you make a mistake? Should just let it go through and not necessarily, be proactive and contact the IRS to see, how you should handle it, or, do that? Or should you proactively contact the IRS and um, file an amended return? So there are a couple of things you need to know. If the mistake is really huge, like you did not report all your income, particularly like W-2s, or if you sell a home or you had stock sales, the IRS actually gets that information reported to them. So there's a good chance that even though you file your tax return and IRS accepts the return, there's a good chance later on, a lot of times in August, IRS will come out with what we call a CP 2000 notice. The CP 2000 notice is a notice, and it reads something like, hey, we are proposing to adjust your tax return because we got information from third parties that basically say that you did not report all your income. It doesn't match what you have on your tax return. So in those instances, what you need to do is really read the notice. You want to read the notice to see whether or not the IRS is correct, or whether or not you need to dispute the notice. There are instances where the IRS is not correct, and so we go through and we dispute the notice. Those are your really major issues that IRS will pick up and send you that notice. In some instances, they do not send you a notice, and you may have to proactively contact the IRS by filing an amended tax return. Now, when you file an amended tax return, the form you are going to use is going to be a 1040X. A 1040X. That's the form you use to correct the error, again, if it's a major error. Now, the question is, again, what constitutes a major error? A lot of times it's if you have income that you haven't reported, or if you have deductions that you fail to claim that you should claim. So be aware, if you do not correct the return on your own, there's a good chance that the IRS will correct it for you. The other part of what I wanted to share with you today in today's discussion is that when IRS makes an adjustment to the return, a lot of times they will report the adjustment also to the state. So if you decide to file an amended return as a result of maybe getting a CP 2000 notice from the IRS, you also want to consider filing an amended return with the state. That way you won't be surprised years down the road, 2 or 3 years down the road, when the state contacts you and say, hey, you owe us additional taxes. So I bring this to your attention because, again, I don't want you to be blindsided later and have this huge tax bill because you did not correct the error with the IRS. So with that being said, I'm going to jump off now. If you have any questions or you need to reach out to me, my name is Beverly Winstead. I am a tax controversy attorney here in the Washington, D.C. area, and I can be reached at 301-306 1234. You also can visit me on the web at www.irshelpattorneys.com. Thank you.